How's it going, everyone? It's Matty here from Logikfx again. Just going to go over some more fundamental analysis, and more specifically one of the trade ideas I actually posted with the analysis in the end of January this year, so about the start of February, which is about a few months ago now. But most of our positions, they do tend to materialize over 1 to 3 months, and that's why I'm updating you all now on this fresh trade idea. So USDMXN fundamental analysis 2020 was the idea. In the end, we did have a long bias on the exchange rate, and we'll go into why in this video. So if you've watched some of our previous videos, you remember at Logikfx, you'll understand that we take a fundamental strategy, a fundamental analysis approach to the markets, and then timing that fundamental idea with technicals and with sentiment. This is a bit of a different idea towards what people normally think trading is, and it's actually what's worked for us, it's what's worked for our members, and that's why we're giving it back to you as free and paid content to everyone out there. So delving into the analysis of USDMXN, not many of you, I don't think, will actually trade this pair, but a lot of our Logikfx and Lita members do, because they understand that the volatility on this currency asset is quite high, and that's where you can make some potential gains. So we always start off our fundamental analysis with the USD against the Mexican GDP differentials, and that's identified here in the chart below. So what happened here was that the differential is in the blue line and the USD/MXN exchange rate is in the orange line. And what we saw was that the USD was actually growing at a faster rate than Mexico, and this created a long bias overall on our scorecard. Now, the recent data did show a slight slump, which could suggest that it was headed towards a downwards trend, but overall it's still above that 0 percentile number of the differentials here. So as long as the blue line's above the 0% line here, we can expect a long bias in the future. And that's kind of represented a lot throughout the 30 years that the data goes back on. So after we identified the scoring and the bias of the GDP differentials, we went on to what factors could impact the USD/MXN exchange rate, and oil was actually a really big factor. So we decided then to analyze the ExxonMobil US multinational oil and gas corporation, and we identified quite a positive relationship over the last 20 years, as in general, when the Exxon price increases, so does the USD/MXN exchange rate. And it's kind of an interesting correlation, because normally what you'd see is that stocks have an inverse correlation to the US dollar. But in this case, we actually saw that there was a slight positive correlation going on. And we then went on to analyze oil, like oil in terms of crude oil, so WTI is the ticker name for that, against the US dollar. And what we saw was there's actually an inverse correlation with oil and the US dollar. And if you're a veteran Forex trader, if you're just learning Forex trading, a definite thing to just pick up from this video is that in general, the US dollar has an inverse relationship to riskier assets. And that's what we term a lot of the times risk on and risk off. So in risk on situations, risk assets increase and the US dollar decreases, and in risk off situations, the US dollar increases in value whereas the riskier assets decrease. This is because of that psychological biases that we see, where when people aren't confident in the future, they'll tend to put their money in safer assets, whereas if they're risk taking in the future, they're confident that the economy is going to grow, all that stuff, they tend to put their money in riskier assets such as stocks, such as potential energy, they're trading oil, all that stuff. And in this case, we analysed it, we came up to the conclusion that actually, because of oil was decreasing significantly during this period, it actually went to $0 a barrel in the coming month. We had a really strong long bias on the US dollar, and in particularly USD/MXN, because of that negative inverse relationship. We then went on to analyze General Motors as well, and then did the same analysis on that. And we actually went on to analyzing the USD/MXN interest rate differentials. And something interesting that we picked up from the interest rate differentials was that they were actually starting to bottom out. So even though Mexico had a stronger interest rate than the US, The interest rate differentials was starting to bottom out and potentially trough, which meant the US interest rates could actually start increasing, or the Mexican interest rates decreasing, which means potentially we'll see some more money flows going into the US dollar, as we've seen in history. Then we went on to analyze the S&P 500, which is a barometer of wealth in the United States, against the USDMX exchange rate. Again, we saw something similar where the US dollar was increasing while the S&P 500 was also increasing, which was interesting. And we came up to the conclusion that based on our logic strategy scores, which I'll come on to in a second, and the USDMX relative score, which we just did in the analysis above, we had a strong long bias of positive 40 for the US dollar and minus 44 for the Mexican peso. And afterwards, after we found that, we then looked into the COT analysis. So all of our members have access to one of our COT indicators. If you do want access, go click the link below. I'll kind of walk you through how to do that in a second. But we saw that the US dollar was in a positive region. That means the pink line here, the hedge funds, were overall their open interest in the markets was net long, meaning that they are actually longing the US dollar. But at the same time, they were also longing the Mexican peso. So the COT and the sentiment analysis kind of cancelled each other out. We weren't sure whether which way the market was going at the time, definitely. But overall, when we looked at the technical analysis as well, the market seemed to have retraced since about 2019 back down to another buy zone area where buyers were actually able to come in and push the price much higher. With this analysis, we then identified, right, this is actually potentially a good time to get in on, because there's a lot of areas where there's opportunity to get in with potential technical patterns, other types of news that potentially will come out. And that's why we identified here, like, what you want to see is potential candlestick formations, higher highs, bullish formations. Anything that you use in terms of technical can be used here. It's up to your discretion, really. But because we already have that fundamental bias of longing it, you can then go into using the technicals. And what I really see fundamental analysis as is a big filter on the whole market. So you know what currency pairs to pick out of all of them out there. And then you actually know when to trade it using technicals. And that's like how I think successful traders and how a lot of other funds use trading analysis. I did a bit of ATR calculations here, so volatility analysis to work out stop loss and target, and that's what you see on the red and the green here. And since then, since the end of January and the start of February, what's happened to the USD MXN exchange rate? Well, interestingly enough, the analysis worked perfectly, and we ended up actually hitting our target of about 24.5 up here. Since then, since it hit our target, the position has actually retraced. And why is that? Well, let's first look into what's actually happened. So during so our analysis was released here on the 29th of January, start of February, so around these candles here. We identified in the red line the buy zone, and the green lines was a deeper buy zone. But since it had entered the red buy zone, we'd already thought the idea was quite good. We started to see green bullish formations in lower time frames in this area. And then what came around the corner was COVID-19. Now that goes back to that point that I was making earlier about the risk on, risk off, and what happens to the financial markets during these periods. Well, what happens when COVID-19 strikes? Does that make everyone confident, or does it make everyone not confident? Does it make businesses confident? Does it make them not confident? Well, you can probably answer that. Consumers are not confident at all. They're losing their jobs, they're not working, businesses having to freeze, go into lockdown, they can't make goods and services. That all creates a risk off environment, which means people are now trying to put their money in safer places. They start to take it out of risky assets, put it into safer places, moving their money around. And that's why we can actually see the US dollar exchange rate spiking significantly, which actually pushed our idea right to our target. After it hit our target, so after a couple of months now, it hit about March, April, start of May, around May time now, what happened was COVID-19 infection rates had started to drop. Infection rates dropping, lockdown measures have been working quite well. And this has started to get people confident again. As people actually starting being able to get back to work because of these lockdown measures easing. And what we're seeing now, though, is China experiencing a potential ripple and a potential second wave of COVID-19. And that's actually quite evident in the exchange rate itself, because when this news was released, buyers started to come in again on the US dollar. Now, what might we see in the future? Because this is still early news. Well, in the future, because China is actually one of the most strictest countries out there in terms of handling the coronavirus, and actually they were the leading country in getting it into lockdown and getting the infection rates down really low. What's going to happen to other countries? The UK, the US, Europe? All their lockdown measures are now starting to ease, which means people are, being able to see each other again. They're going back to work, schools, they're going back to school. What's going to happen? Well, all these other countries aren't as strict as China. China implemented a very strict regime. They kind of have an iron fist on their economy. But the UK, US, Europe, all these other countries, these tend to be riskier currency countries. What's going to happen is they're potentially going to see a second wave of COVID-19 as well, because China have already experienced it now. They've actually locked down schools in Beijing. They're potentially locking down various neighborhood cities within there as well, and they have a very strict procedure in place, such as measuring people's temperatures. They have infrared scanning, all this stuff to actually track them. They track their mobiles, QR codes, but all these other countries don't have that in place. UK is very far behind in terms of tracking. I think they've now partnered up with Google and Apple on the tracking procedure, but a lot of countries are very far behind, and we'll actually, in my opinion, we're going to experience a second wave very quickly, which means there's going to be more targeted lockdowns throughout the country, and there's going to be more targeted lockdowns throughout different countries like America and Europe as these spikes continue. And basically, until a vaccine is made, we can tend to see risk off happening quite frequently, meaning people are taking their money out of riskier assets and putting it into safer assets. That's why potentially I think that this USD exchange rate is going to appreciate again due to this factor, until we see a vaccine being made, until we see that being able to be distributed everywhere. So why have I brought it up now? Well, recently in March 24th, I posted an idea about the USD PLN exchange rate and potentially what's going to happen in the future, being that there was going to be a short on it. So that's down here. It hit this resistance level. Based on the fundamental analysis and that resistance level, I thought it was going to decrease in value. And if we just check up on that now, USD PLN, just using TradingView, what happened was, once it hit that resistance, our conviction was actually right. The fundamental analysis was correct. It was quite a good time to get in. You had a lot of time to get in on that position. But since then, since the recent data, the USD exchange rate's been increasing again. And it's actually shown in our logic strategy scores. So the US dollar has strengthened significantly since we last did an analysis post. And with that, with combination, fundamentally, what these scores actually do, if you don't know, they fundamentally analyze an economy, so you know whether one's going to be strengthening, one's going to be weakening, is the dollar going to appreciate or depreciate, etc. So when one's strong, it's potentially going to increase in the future, and when one's weak, it's potentially going to depreciate in the future. We've got a lot of maths behind this scoring system, and it's essentially what you learn in our masterclass series as well. But in combination with the current scores and what's going on in the news, that idea now, even though we expect it to go a little bit further, is potentially a good time to be safe and actually get out of the position. Just because of the current climate in terms of COVID-19 and the uncertainty created around it, which stimulates and increases the value of the US dollar. So after the US dollar positions, We've discussed these US dollar positions. What else was there to, back up my thought process on why I think it's a good time to get out of this idea? Well, something interesting started happening with the COT positioning, and if we follow the pink line in recent days, since the COVID-19, which is happening here, these are the hedge fund positions. Hedge funds dropped their positions into a net short position during the COVID pandemic, but since that time, it's been increasing slowly. And in the last 2 to 3 weeks, it's actually flipped into a net long open interest positioning, meaning hedge funds are actually starting to long the US dollar again. And this generally accumulates into a very long-term trend in the upside when positioning starts to do this. If we look at the factors, if we look at riskier currencies like the Australian dollar, we can see they're still in the net short position down here. So we also have an AUD USD position which uses this analysis actually. If you want to go into the trade ideas in your portal, you'll be able to identify that in the blog post that I wrote about. But we can just see an overall trend that the risk assets seem to be going downhill, whereas the safe assets like the Japanese yen, the US dollar, seem to be increasing in value again. And I think definitely with a potential second wave of COVID-19 that hedge funds are actually right on their conviction of longing the US dollar again. And that's why I think the USD Singapore idea that I posted in the trade idea section and the USD PLN short idea that I posted, it's potentially actually a good time to take your profits on that at least a 1 to 2 risk reward that we identified. I think it was at 1 to 2.5, 1 to 3. It's definitely probably a safe period to take your positions out at this time, if you were able to take advantage of this analysis that we did. And actually, with the USD Singapore idea, I potentially think we could be on a reversal. So similar to the USD PLM, if we go to USD Singapore, so we have the USD Singapore dollar here. It's got an interesting morning star formation about to happen. Potentially we're seeing, just looking at this, let's get a horizontal ray line going on here. We just put it here. Potentially what we'll see is this area, this point of resistance before, being used as a level of support. And with the current COVID-19 potential second wave coming in again, meaning more lockdown restrictions, we could see this appreciate again, just like it did in the past in the recent wave. Now, with that being said, we need to take into account a lot of uncertainty in the markets. When we're doing our fundamental analysis, we just need to always keep on top of all the economic themes, the political themes that are going on, and that's the importance of this really, and that's why this is a bit of a shot in the dark in terms of what's going to happen in the future, because I'm using a bit of news that's going on top of the economic data analysis. Now, let's have a look at some other trade ideas that I posted in the trade ideas area. So if you want to go to your portal, you'll be able to get into the trade ideas section. I actually did an analysis video on the Australian dollar, US dollar. Now, that's where I had the idea that potentially the US dollar is actually going to strengthen and these riskier currencies are actually going to weaken. And that's why I'm updating you actually on the US dollar in particular, because this is my outlook on the US dollar. My outlook on the US dollar is very bullish right now. Until I see something that's going to give me the opposite conviction. The only thing that's going to give me an opposite conviction of the US dollar not being bullish is a vaccine being, confirmed and being able to be distributed across the world. That's literally the only thing right now which I think will give me a bullish opinion, because a lot of companies, they're not going to be profitable for a long time now due to this whole thing. And yeah, so that's basically my fundamental outlook on what's going on in terms of the US dollar. Just as a little update for you all, because everyone's on YouTube right now, if you'd like to learn how to implement fundamentals, what we can do for you right now is that we have a online web class going on. It's basically something for beginners and traders out there that have already started training in trading. It's to get them into fundamental trade analysis and fundamental analysis as a whole, because not many people can find how to do fundamental analysis online, and that's where we come in. We've actually conducted seminars across UK universities. We've had posts on investing.com, and also we've been featured in various financial magazines. And if you actually want to learn a bit of fundamental trading, a bit of our fundamental strategy, and whether it's for you, get over to the logikfx.com/learn -to-trade, which is just up here. The link will be in the description as well. You'll click this button, I want to learn fundamentals. You'll go down here and you'll reserve your spot for the video web class, and then you'll be able to learn exactly what goes on. There's a little bit more information here about what's in it. Those of you that are already Logikfx members, it might be a nice little update on earlier stuff that we've covered, but you already know what's going on because you've finished the web masterclass. That's a little bit about the fundamental strategy. If you're interested in that and interested about actually how we conduct this fundamental analysis that I've showed you in these various posts, how I've come up with these successful ideas such as the USD Singapore dollar, the USDMXN long idea that I showed you. And yeah, so if you're interested in doing that fundamental analysis, definitely give that link a click, put your email into that, contact us, do whatever. We're trying to get out there and trying to get people into fundamental analysis trading, because that's where the money is actually made in the markets. Thanks for watching the video. If you're not already a subscriber and you're quite interested in these videos as well, do make sure to give us a subscribe, because it really helps us out. And also like the video, comment what you think is interesting, share it around in any groups that you know. Thanks for watching, guys. It's Matty from Logikfx. Hope to see you again soon. Stay safe.